Welcome back. Today we're diving into a topic that has been getting a lot of attention across crypto circles, and for good reason. There's a lot happening behind the scenes with Kaspa, and the latest data reveals some powerful signals about how the community is behaving, how the market is positioning itself, and what that might mean for the future. So let's get straight into everything without wasting a moment. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. According to updates shared by Kaspa-focused accounts online, the long-term holder base has been showing remarkable strength lately. And when I say strong, I'm not talking about the typical long-term holding patterns you see in most projects. I mean the kind of strength that makes people stop scrolling, look closer, and rethink what they know about this ecosystem. The newest on-chain insights reveal that a surprisingly large percentage of Kaspa's circulating supply hasn't moved at all for long periods of time. To put it into perspective, roughly 37% of all KS tokens in existence have stayed untouched for more than a year. Think about that. Over 1/3 of the entire supply hasn't budged, not even slightly, for 12 straight months. That only happens when people have genuine conviction. And it's not something you see with every project. But the story doesn't stop there. More than 16% of the entire supply has stayed frozen for over 2 years, while about 5.7% has not moved for more than 3. When you look at those numbers collectively, they tell a clear story. These are not people hoping to double their money overnight. These are holders who understand the long-term potential of what they own, people who have been through multiple market cycles, people who've seen pullbacks, rallies, corrections, and everything in between. And despite all of that, they continue to sit tight. That level of patience doesn't appear in ecosystems that rely solely on hype or temporary marketing. Instead, it shows up when a community truly believes in the underlying value of a project, the strength of its technology, the capability of its team, and the vision guiding its progress. When that percentage of long-term holders grows, it usually sends a clear message. A good chunk of the market sees this as a long-term investment rather than something to flip for minor gains. There was another interesting perspective shared recently by someone in the community named Christina. She made a point that I think many people need to hear. She said that some holders panic when their portfolio dips by a couple $100, maybe $100, maybe $500. Meanwhile, in what she called big houses, meaning institutional players and major investors, millions vanish in crypto markets every single week without anyone reacting dramatically. And the reason she highlighted this difference was mindset. The difference between fear and confidence, between impatience and long-term vision. And she's absolutely right. Many people approach crypto as if it's a lottery ticket, hoping for an overnight miracle. But Kaspa isn't a scratch-off game. It's a long-term technological build. This is the fastest proof-of-work blockchain currently operating, combining decentralization with groundbreaking throughput. It's a project with real fundamentals, understanding that changes the way you behave during volatility. And the truth is that the people who remain calm during market downturns are usually the same ones celebrating the loudest during market recoveries. That's not motivational fluff. That's how actual wealth building works in this space. Historically, it's the patient ones who come out on top, not the people who react emotionally to every 5% swing. Now let's shift to another important development. According to some analysts, exchange holdings have recently climbed to a new all-time high. In simple terms, more KAS is flowing into major centralized exchanges and being stored there. This has resulted in the highest supply concentration on exchanges that we've seen so far. And that sparks a very important conversation, because inflows into exchanges often tell us something about trader behavior. This trend can be interpreted in two very different ways. On one side, increased holdings on exchanges could mean that more people are preparing to trade actively. When tokens move from private wallets to exchanges, it's often a sign that traders are expecting price movements and want to be able to react quickly. That can hint at volatility ahead. On the flip side, when exchanges begin accumulating more tokens, It can also indicate that new money is entering the ecosystem. It may signal growing demand, buying pressure, or broader interest forming beneath the surface. So the truth is that this development cuts both ways. The only way to understand which direction the market is leaning is to closely observe the price action and trading volume over the next several days. Adding to these discussions, one prominent analyst mentioned that this week might be one of the most important moments for crypto in recent memory. He said that if former President Trump signs a U.S.-China deal, it could send waves through major markets. And while he noted that many people are already slipping into holiday mode, he warned that ignoring potential catalysts right now could be costly, especially if Kaspa makes a sudden move. Now, it's important to stay grounded here. No political event guarantees anything specific in crypto, but we can't deny that major macroeconomic decisions influence market behavior. When global relationships stabilize or when economic tensions ease, risk assets, including cryptocurrencies, tend to benefit. So if positive macro developments unfold, a project like Kaspa, which already has strong fundamentals and an expanding community backing it, could absolutely gain momentum. But even then, relying on one event is not a long-term strategy. The real growth of a blockchain ecosystem comes from consistent development, real-world use cases, and technological improvement, and Kaspa continues to deliver all three. Speaking of development, let's talk about the recent price action and what the technical signals are showing us. Kaspa enters this week attempting to rebound after several weeks of consistent selling pressure. But here's where things get interesting. Even though the price has been under stress, the project itself has been hitting milestone after milestone. Just recently, Kaspa processed a record-breaking 158 million transactions in a single day. That is an astonishing level of throughput that very few blockchains in the world can compete with. The network has also grown to nearly 915 public nodes and is inching closer to the 1,000 node mark, which would be both a symbolic and technical achievement. On top of that, the Kaspa decentralized messaging app went live on Google Play, once again proving that the Kaspa network is capable of more than just processing peer-to-peer payments. And let's not forget the project just celebrated its 4th anniversary, another reminder of how long the community has been building and supporting this ecosystem. Despite these massive achievements, the price has struggled, falling more than 50% over the past 2 months. This shows how ruthless the broader market environment has been. So the big question everyone wants answered is whether this bounce can sustain itself. Looking at the chart on the 4-hour time frame, the downtrend began in late October, pushing the price from around 4.7 cents down to the recent low near 3.6 cents. That 3.6 cents region has acted as support multiple times, and the price now appears to be stabilizing above it. Currently, Kaspa is trading around 4.1 cents with buyers slowly returning, but resistance remains a challenge. The price has attempted to break above the 4 cents level twice this week and was rejected both times. If Kaspa finally manages to reclaim that zone with strength, the next obstacle appears around 4.7 cents, which was the breakdown level earlier in the month. A solid breakout above that zone could mark the start of a broader trend reversal. On the downside, the 3.6 cent support is still the level to watch. If that fails, the momentum could shift bearish again and potentially send the price even lower. Looking at market indicators, the relative strength index on the 4-hour chart is hovering near 40 and slowly curling upward. That tells us the selling pressure is cooling and that there's room for further recovery before conditions become overheated. Open interest remains around $235 million with little change, which means traders aren't rushing into leveraged bets or panicking into liquidations. Net long and net short positions appear balanced, reflecting the sideways price movements we've seen lately. The MACD indicator is turning upward after a long period of bearish momentum. While early, it's a positive sign that some strength may be returning. So what might happen in the short term? The direction Kaspa takes next seems heavily dependent on whether buyers can push through near-term resistance. If the price breaks above 4.1 cents with strong buying volume, there's potential for a move toward 4.4 cents and possibly 4.7 cents. That level near 4.7 cents is extremely important because reclaiming it could shift overall sentiment from neutral to bullish. On the other hand, if the market weakens again, the price may retest 3.6 cents, and if that support cracks, the recovery we're seeing right now might fade quickly. And considering the wider crypto environment remains unstable, sudden moves shouldn't surprise anyone. What we're seeing right now looks like an attempt to form a bottom after a prolonged decline. The fundamentals look strong, the community is active, and development continues to move at full speed. But many traders are waiting for a clearer bullish pattern before committing new capital. The most important point to understand, however, is that price action is only one part of the bigger picture. Yes, everyone loves green candles, but what really matters for long-term success is what's happening behind the scenes. The technology works consistently. The network is scaling, applications are being built, the community continues to grow, and long-term holders keep accumulating instead of giving up. All of these elements create a foundation that lasts longer than any short-term correction or dip. And that is why so many people remain confident in Kaspa, even when the chart looks rough. Projects that survive bear markets are the ones that shine the brightest during recoveries, and Kaspa has shown repeatedly that it's here for the long run. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.